Hey guys, this is a another video cast for MarketChasers.com. I am feeling a bit under the weather today, as you guys can hear in my voice, but I'm gonna try to keep this short and sweet. My internet is running a bit slow, so please bear with me. But I'm not gonna go over any like actual charts today. Maybe one or two, just to like I guess reference the points I'm trying to like show you guys as I make this. But this will be mainly a trade thesis type reinforcement post. And I don't know how many of you guys are interested, but on my website, marketchasers.com, uh, we had, I guess, like a spotlight post that was done over me by TradeKing.com, which is one of the brokerages I use, and I use it for actually my options trading. But if you guys are interested, check out the charts. Or, I mean, the article that they posted. It's actually as I said, an all-star spotlight on me. But the title of the article is Yuri Cowman Eyes the Shorting Opportunity of a Decade, which is my username on there. But Nicole Walks, who's the director of education on TradeKing, she wrote a nice little article. We had like basically a conversation where she got a couple points that that she wanted me to highlight, or whatever. I gave her my I guess analysis and stuff. And here's one thing that I showed her, which is one of the charts for one of the plays that I made, which is Burlington Northern. But if you guys want, go ahead and check out the website. It's www.marketchasers.com for the people who see it who aren't regular followers of my website. But the way I usually start these out is I have the E-mini futures as always, and let's go and look at a 60-day chart. I'm gonna clean this up a bit. Actually, it'll be a 5 minutes of an hour. Will look a bit tighter, but as you guys know, this is the same Fibonacci chart I've been using for probably 2-3 weeks now. But the precision that the chart follows, as you guys can see on the hour chart before it actually loads, and as I said, my internet's going pretty slow, but it's pretty stellar on how accurate it is. And as you guys can see, it's using this fan line for some support. I'm still net long, and I guess I ended up about even today. But I mean, I don't mind taking a even day. Actually, I was down maybe a few bucks, but nothing really big. But on a down 400 point day, I don't mind that. But I'm still bullish, and we're gonna need to break this point right here to break out. But as we go up, I'm gonna slowly add to a bunch of my short positions, and I do have a list of stuff that I am watching, and you guys can always follow me. But as I said, this post isn't really for charts. It's more to reinforce trade methodology. And I just want to say that no matter how you trade, you can make money. It doesn't matter if you're a day trader, a long-term investor, or a mix of both. But especially this year and probably even next year, you're gonna need to trade pretty nimbly no matter what you are. It doesn't matter if you're long-term or a short-term 5-minute candle trader. The market moves that we've been seeing, some of the moves that happen in days like this is, way too big to, I guess, let by. And one example was Bank of America. For those of you who follow me, I bought Bank of America not based on any kind of candle pattern or technical, trigger for a buy point. The only reason why I bought it is because it was, I guess, so oversold. And realistically, for those of you who are looking to get long Bank of America for the long term, really now isn't really the time. I use it as a day trade. I bought in at about about 540 or so, 530, which is right around this point. Dropped down, but I didn't sell. But it rocketed back up, and actually should have sold it yesterday before the close. Or actually 2 days before the close, because actually by the time I post this video, it's already going to be the 11th. But on the 9th at the close, on what is it, Monday. I should have sold it, but I'll show you why. Put up a yearly chart of this. Give me 1 second, bear with me. But we ran into the 20-day moving average right here, and we proceeded to fall pretty hard. I ended up selling it about like 6:30 or so, about an hour after the opening bell. But you know, for those of you guys who do follow me, you know, I am primarily a long-term investor, but this past year I've been using a lot of options, I guess, as a hedge, and I use that money to fund my long-term account. But even during these times, you know, I have to take that profit off the table, and Bank of America, you know, was an example. You know, and as I said, I didn't go in there, you know, to invest in the long term, and really there is no reason why you should be in there for the long term. I'm pretty sure their dividends at a penny, if I'm not mistaken, unless you know, I guess my eyes are deceiving me or something. But you know, literally, there is no reason why you should be long. This is purely a day trading stock, and you know, it'll be that way for quite a while. You know, but you have to stick to the way you trade and whatever works best for you. You know, like, I guess the strategy I try to implement whenever I go long is, you know, one that a lot of people already know, and it's the buy on a dip, sell on a rip theory. And basically what you do is you scale in to certain positions that you have. Pull up the futures again just for you guys to look at a live chart of that. But as I said, like, you choose X amount of positions, and you always gotta have cash, you know, on the side to buy on dips. And really, during these times, that's not a bad idea, because in November when we had that huge drop, that was really more of an anomaly than, I guess, you know, anything else. And really, we shouldn't see anything like that ever happen again, at least for not a while. But if you have cash on the sidelines, just keep it there, and then scale into positions. And when we have rips like we've had, you know, the past, let me guess, what was it, like the 3 or 4 days before Geithner talked this afternoon, we had a huge rise in equities, and you can use that, you know, time to sell. And the really cool thing about when you buy in like that is you lower your cost per share basis. At least that's, you know, the theory that I use. You know, if you're like a pattern day trader, you know, you have to set stuff like trailing stops or sell whenever, you know, you're in the money, especially at times like this. So, you know, this post is just dedicated, I guess, for me to reiterate the fact that you got to keep your head on straight, and you got to be a smart trader this year, because the way the market's been moving, I mean, you know, the only way to describe it is a whipsaw. And I'm gonna show you guys real quick what I'm talking about. Let me pull up an SPX chart. I mean, just a 60-day 5-minute chart, and I'll show you what I'm talking about. But over the past 2 months, the S&P 500 and, I guess, you know, the Dow retrospectively has been trading a very, very tight range. Since, I guess, early January to today, it's been trading in about a 100-point range. But, you know, since, I guess, January 20th or so, we've been trading in a 50-point range. And that's really hard to trade. And if you look at the way the chart is set up, look at that. It's just, wow, up, down, up, down, up, down, up, down, up, down. You know, and it's a lot harder to trade than, say, that cascade formation we had. We had a huge drop right there. But, you know, you gotta stay nimble and be safe out there. So, you know, please make sure to check out marketchasers.com, and happy trading.